One of the top financial stories recently has been the Malaysian Ringgit surge. After hitting multi-year lows, it mounted a remarkable comeback to become Asia's best performing currency in 2025, gaining over 10% against the US dollar. As of today, January 28, 2026, the ringgit is trading strongly at around 3.92 ringgit per US dollar, a level not seen in nearly a decade. Joining us to unpack this dynamic and discuss what 2026 holds for the currency is Dr. AFZANIZAM RASHID, Chief Economist at Bank Muamalat Malaysia, Berhad. Thanks for doing this, Doctor. I'd like to start here. Now, the Malaysian ringgit was Asia's top performing currency last year, gaining over 10% against the US dollar. What were the primary drivers behind this remarkable comeback? Walk us through this, Doctor.
Sure. Thank you, Melissa. Thank you for having me. Obviously, there are multiple factors at work that resulted in the appreciation of ringgit against the US dollar in particular. One is obviously the state of the monetary policies in the US. Since last year, I think we have seen the Federal Reserve have cut their interest rates, and that led to 10% appreciation of our ringgit against the US dollar. And now the issue currently in terms of external front actually revolving around the Japanese yen and the coordinated intervention between the Japanese government as well as the US Federal Reserve Bank of New York in order to prop up the Japanese yen. That would mean they want to buy yen and to sell dollar in essence. So that's on the external front. Internally, domestically, obviously, the state of our economy, I think we have seen the advanced estimates of our GDP for the Q4, where it surpassed the economist's expectation. The latest print for the Q4 is about 5.7% growth. And then for the full year, we clock in at around 4.9%. That essentially exceeding the official forecast by the government of around 4% to 4.8%. And of course, recently, last week, we have seen how Bank Negara decided to keep and maintain our OPR, and more importantly, is the accompanying statements in that decisions where there was a positive assessment among the Monetary Policy Committee members with regards to our economic growth. So I think both sides, the external and the internal factors, have worked really well in terms of determining the current momentum of ringgit appreciation against the US dollar now.
Now, many expected a substantial weakening of the US dollar to be the main factor. How significant were domestic Malaysian fundamentals such as perhaps economic growth, political stability, and the central bank's policy in supporting the currency surge? Pardon me.
Right. I think if you look at the fund flows in the foreign funds, I mean, how our foreign investors perceive about our ringgit especially, we have seen that for the bond markets last year, we saw a net inflow in the bond market totaling about 26 billion ringgit versus 4.8 billion in 2024. So that would mean the foreign investors have been very bullish about our bond market. That resulted in a demand of ringgit. That's one. And then if you look at our equities market at the moment, we can see our FBM KLCI have recorded quite a substantial increase, and that resonates really well with the, again, net inflows among the foreign funds in the equities market. I think between 2nd January until yesterday, the amount of net inflow is close to around 1.4 billion ringgit. So we can see foreign investors have been bullish about Malaysian assets. That actually reflect the confidence that they have with regards to the economic policies and how would that translate in terms of the economic growth prospect for 2026 and beyond. And also to some degree, in terms of politics, because of political stability can be retained, that would ensure whatever policies that are in place can be executed in a timely manner. So I think there's various factors that works really positively to determine the current ringgit appreciation momentum at the moment. Yeah.
Now, some forecasts predict it could reach 3 ringgit 93 cent per US dollar by mid-2026. Do you share this bullish view, Doctor?
Sure. I think when it comes to currency forecast, it's actually the most difficult economic variables to be projected. For me, if you look at a simple metrics, if you look at the average of dollar ringgit from the moment we remove the currency peg on the 21st of July, 2005, up until now, the long-term average is around 3 ringgit and 82 cents. So that gives you a sense. That's the long-term average, and that will give you a sense what will be the next direction for ringgit. And obviously, the way I see it, there are still legs for ringgit to be appreciated further, assuming that the current factors such as the anticipations of interest rates cut in the US, weakening of dollar, and of course, the positive economic momentum for Malaysia can be maintained. So I think we are seeing a trend where ringgit could potentially continue to record appreciation trend in the near term.
Now, the global economic landscape remains volatile with risks like potential US tariffs and geopolitical tensions. Now, what are the main external risks, in your opinion, the ringgit faces in 2026?
Right. I think I would place a greater degree on the US economy, because that would translate in terms of how would the US dollar would actually fluctuate going forward. At the moment, the narrative is that the Fed would cut the interest rate by 50 basis points this year. If, let's say, the US economy continues to prevail and they manage to record a respectable growth this year, and that resulted in high inflation, and ultimately the Fed decided to change their tack and perhaps to maintain and perhaps also to increase their interest rate, that could actually change the cost of US dollar, and by extension, how ringgit could appreciate further. So I would place the directions of interest rate in the US will be the main downside risk for ringgit. Beyond that, obviously, the geopolitics, how the tariff would impact the global economy, and mostly very much externally driven as a downside risk for ringgit.
Now, we all know there's a lot of ongoing uncertainty worldwide, globally. What lessons the Malaysian ringgit's performance offer for other emerging market currency, Doctor?
Well, I think that what matters now, we shouldn't be fixating about how to manage the currencies. What matters is the government of the day should be focusing on delivering results, outcome. That will mean crafting good policies and be able to communicate those good policies and better outcome to the various stakeholders. That would include the investors, businesses, and more importantly, the rakyat. So I think that should be the main focus. All this, the good stuff in terms of economic policies, eventually will be rewarded by the investors. So I think the focus should be on prescribing the right policies and implementing it in a timely manner.
Now, lastly, drawing closer to home, stronger ringgit means our global purchasing power improves. In simple terms, what does this mean for the average Malaysian household like you and me?
Right. I suppose those who would want to import products from abroad, they would be experiencing improvement in terms of their purchasing power, because ringgit now has strengthened and then actually improve the ability to buy more imported products. That's one. Obviously, those who plan to go abroad for their vacations, and perhaps also those who have been sending their kids and children to study abroad, will be experiencing a reduction, improvement in terms of their purchasing power. So I think that would be the immediate benefits to Malaysians like us.
Doctor, that's all the time we have. Thank you for sharing your perspectives on the show.
Most welcome.